Jordan held a leveraged Bitcoin long overnight, and by morning his account was down $300 without price even moving against him. No crash, no stop hit. What quietly drained him was funding rate, a cost most beginners never check. Add to that a warning candle he scrolled straight past, and you get one blown up trade from two missed signals. Today, two terms every trader needs on radar: funding rate and the Doji candle. Then we hunt both live on today's Real Bitcoin chart. Funding rate is the fee perpetual futures traders pay each other every few hours to keep contract price tied to spot price. When more traders are long than short, longs pay shorts, and the number turns positive. Deeply positive funding means the market is crowded with leverage on one side. You check it on your exchange's futures page, not on the candle chart, updated every few hours. Why it matters: crowded positioning is fragile. One stalling candle can trigger a cascade of stop outs. Use it as a filter, not a signal on its own. Rising positive funding plus a stalling price means tighten your stop. It does not automatically mean flip short. Here is the frame Jordan should have used. He is long. Funding is deeply positive, meaning he pays to hold and price stops climbing. Trigger to tighten or exit: a candle closing below the last high or low. Stop a few ticks under that same low. Enough room for a wick, not enough to give back the move. Target: the level where funding usually resets, often the swing low before the rally began. Check funding before you add size, not after your account already bled for it. That is half the story. The other half is a candle he scrolled past completely. A doji is one candle where open and close land almost at the same price. Body razor thin, wick sticking out both sides, looks like a plus sign. Classification: a simple one candle pattern. Direction: neutral by itself, and it only acts as a reversal signal when its location is right. Spot it by comparing its tiny body against the last several candles. Why it matters: it shows buyers and sellers fought to a draw right after a strong move, often the pause before momentum flips. Trigger: the next candle breaking the doji's high for bullish or its low for bearish. Stop just beyond the doji's opposite wick. Target: the prior swing point, aiming for at least 2 to 1. Here is a doji on a real chart, a confirmed instance, real price, real date. Notice where it sits, right at the top of a stretched run, not floating in the middle of a choppy range. That location is the whole story. Context always outranks shape. Pause here, pull up your own chart, any pair, any time frame, and find one doji sitting at a recent swing, high or low, before I show you what Jordan missed on his own. Both clues sat on Jordan's chart the whole time. Funding stretched positive, and right at the highest candle of the rally sat a doji, a clear exhaustion signal. He judged the candle by shape alone instead of where it sat in the story. The part that actually saves your account comes next, because we are opening a live real-time Bitcoin chart and hunting these exact clues on today's real numbers. This is Bitcoin 4-hour candles live. Zoom out first, context over pattern. The bigger swing runs from a low near 58,115 up to a high near 66,956. Price now trades near 65,353, holding above the shallow 0.236 retracement around 64,870. Bullish structure, buyers defending a shallow pullback. Hunt clue 1 right at that 66,956 high. Look for a small-bodied candle with wicks both sides. Your doji zone, where the rally paused before rolling into this pullback. Hunt clue 2, a high that forms after a stretch run. Like this is exactly where funding tends to run hot. Worth a check before sizing into a long. Zoom into the 1-hour chart for the actual setup. The swing resets from a low near 61,825 up to that same high near 66,956. Retracement levels 0.236 at 65,745, 0.382 at 64,996, 0.5 at 64,391, 0.618 at 63,785. Practice setup only, not advice. Trigger: a bullish reversal candle closing back above 64,391. Stop just under 63,785, room for a wick. Target back near 66,956, roughly $600 risked against over 2,500 in reward, better than 4 to 1. The setup can still fail. The stop is what protects you. Remember, context beats the pattern. The stop is what saves you, and nothing replaces practice on a live chart.